So if Bitcoin can't deal with ETFs, it wasn't even worth owning for the past 15 years, right? Now, you still have to think, okay, is Bitcoin good enough in a place, technologically speaking, that that holding it yourself is workable and attractive compared to letting someone else hold it for you? And if not, then what can be done to keep proving that in various ways? I mean, that's why I do Bitcoin Venture. I'm a general partner at Ego Death Capital, so we're literally funding companies that are trying to improve the ecosystem in some way. But I think ETFs are inevitable. I think they're pools of capital, especially in retirement accounts, that literally don't have another way to get in. This is they have a existing brokerage and they want to build buy an asset and they don't want to hold the keys. And I think that not everybody wants to hold the keys, kind of like how not everybody wants to fix their own car. Not everyone wants to, be a handyman around their house. And some people just don't really want to hold, they don't really want that sovereign property. And I think it's something worth monitoring. And then also like GBTC existed for years as a adjacent to an ETF, and it got over 600,000 Bitcoin in it at one point. And so a lot of this current ETF accumulation is just money flowing out of that and into other ETFs, which are still ultimately mostly at Coinbase. And so I think that there's risk of concentration, but it's not as big as people think, because it's not that much more coins in these things than there were.
Hello and welcome to Cryptury. In this video, Lyn Alden shares her outlook on the financial system and how it is failing, presenting Bitcoin as a viable solution. She dives deep into the role of ETFs and discusses whether Bitcoin can truly withstand scrutiny as an asset. Lyn explores the pros and cons of holding Bitcoin yourself versus relying on others to do it for you. Additionally, she addresses the ongoing debate about Bitcoin's energy consumption and its value as a form of money. But before we begin, make sure to hit that like button and subscribe to our channel so that you never miss out on the latest news from the ever-evolving world of cryptocurrencies. Let's dive in.
I visit every year and they go through periods of 30-40% inflation. They've never, in the kind of modern history, they've never gone through a hyperinflation. Do we define that as having collapsed? Their money supply averages something like 20% growth per year. It's still functional. People are using it. It's not something you want to save value in. It causes all sorts of issues, but it's there. And I think the US, the dollar goes through a very long period before it even gets to that stage, let alone if we were to define that stage as having collapsed. I would define like Venezuela's currency as collapsed, but not Egypt's. And I would say that the US has a lot of runway before it looks something like Egypt's currency. Basically, the variables at play here are the US has growing debts and deficits, and we have a structural trade deficit. And that's all, bad for the currency. And on the other side of that, it's got two really big things going for it that are related. One is it's the most liquid and valued currency in the world. So it's the most saleable good among fiat currencies in the world. And so it's what a lot of companies and governments denominate contracts in, provide international financing in. And when you exchange two currencies, 90% of the time, the way you do it is you exchange one for the dollar and then the dollar for the other one. That's where you get the most liquid markets. And so it's entrenched there. And then the other point of that is that the majority of international debts are denominated in dollars. So there's over 13 trillion in dollar denominated debts, plus all sorts of like swaps and options and other layers on top of that. But just literally securities and loans, over 13 trillion. And all of that represents inflexible demand for dollars, right? So that's more than the monetary base of dollars. There's more dollars owed to international creditors by various countries and their corporations than dollars exist. So there's more demand than there are dollars, at least base dollars, and nearly as much as broad dollars. And so that's inflexible demand. And so I think that Gordian knot has a very long time to unravel. And I think it's a long process. I don't think anything stops this train anytime, in the next several years.
I mean, what's the way out here? What do you think we should do?
I think basically you have parallel systems, right? So one is going through entropy, meaning it's getting less orderly over time. And it's kind of past its heyday, and now it's got all sorts of issues, but it's still got all those entrenched massive network effects. And then you have rising new technology, new ecosystems, new enthusiasm, and the technology is generally better than it was any given 5-year period ago. And so I think basically what you can do, depending on what level you're at, is just you can opt out, or at least you can have a foot in both worlds. You can say, I'll use the incumbent system for when I have to, and for kind of local, most people have a bank account and they use it, but I'm going to kind of take that side with a grain of salt because it's only going in one weakening direction, and I'm going to embrace this newer thing, which is Bitcoin, or in some countries also stable stable coins, but basically really the two applications of this technology that have had really good product market fit, and say, I'm going to go into this world instead, and I'm going to store my value in something that isn't diluted by any sort of central entity. And I think and then if you're a corporation or a government, you can do similar. Generally speaking, the smaller the entity, the fewer decision makers, and the larger the entity, the more decision makers, with some exceptions. And you just kind of opt out and you protect yourself. And I think there's a very long process of more and more people doing it. And then along the way, what we're doing is we're testing this new system. We're saying, how secure is it really? How robust is it really? What needs to be improved about it, either on, say, the base layer or the various layers that click on top of it and enhance it? How can we make this better and truly replace as many components as possible of the prior entropic system? For me, it's like a lot of people, it's multiple touch points, right? So I mean, back in like literally 2010 or 2011, someone was like, hey, I'm mining this Bitcoin on my gaming computer, and I thought, hey, I have a gaming computer, maybe I should do it. And I never got around to it. And then it has like another bull run in like, say, 2013, and I'm like, oh yeah, it's Bitcoin, like maybe I should get some. And then I kind of look at the exchanges, and they're really like sketchy looking, and I'm like, I gotta put more time into this, I'll figure it out later. And then I just kind of forget about it again. I'm focusing on like work and relationships and health, and Bitcoin it never really kind of hit that threshold for me to actually put the right time into it. By 2017, I was running my investment research firm, and Bitcoin started to have this bull run again, so I was like, okay, this time I'm gonna actually like dive into this. So I wrote about it, and I have a very favorable opinion of it. But my article came out in November 2017, and I was like, this has become very over enthused, and so I was like, I'm not gonna buy it, but it's fascinating. But then I made sure not to mistake, so that when we had this blow off top and then it crashed and it underperformed for years, I kept watching it this time, and so I entered during that bear market. I watched the block size war play out. I watched all this other stuff. I kind of saw how Bitcoin behaved. Some of the really simple things that are like kind of stupid in hindsight are like seeing the price chart in logarithmic form, right? Because if you look at it in linear form, it always looks either like a bubble or like a dead bubble. It's not a normal price chart, because its price movements were so crazy. So if you look at it in 2017, it looks insane. But after that significant time, you look at the price in log form, you're like, okay, there's actually kind of a cycle here that it's going through. That's interesting. And so simple things like just making sure to follow it in a bear market, and just a couple like clicks is when I got in that whole kind of bear market period. So for the most part now, I've been clear that I've been bullish on stablecoins for a while. The broader topic is just any like real world assets, right? So it could be tokenized gold, it could be tokenized T-bills, tokenized dollars. That's what a stablecoin is. Basically, there's in financial history, there's always been euro dollars, which is dollars that exist outside of the U.S. banking environment, not just in Europe but elsewhere, even though they're called euro dollars. And stablecoins are just kind of the latest iteration of euro dollars, and there's a demand for it, and it's like offshore banking for the middle class, right? Because it kind of reduces the overhead of someone in Argentina or Egypt or Lebanon accessing dollars if they want that for whatever purposes they might want that. So I think stablecoins and networks that run stablecoins have relevance for probably quite a while. When Salvador wants to issue debt to have a hotel built, and they don't really have domestic capital markets, and then they put it on either layer on top of Bitcoin, or even they put it elsewhere, I can see value in that. There's been interesting research. Like there are programmers on other networks that have they've pushed forward the computer science of rollups and things like that eventually can find their way to Bitcoin in some capacity. So I think that it's partly going through this iterative process to see what works. There's a lot of scams there, obviously, but the short answer is that outside of Bitcoin and stablecoins and these little kind of research niches, I've been publicly skeptical on the value of most of that other stuff.
So there's Lyn Alden with her insights on the financial system and why she believes Bitcoin is the answer. She unpacked some critical topics, from the implications of ETFs to the energy efficiency of Bitcoin mining. Lyn's perspective helps us navigate the complex world of cryptocurrencies. If you enjoyed the video, please give it a thumbs up and subscribe to Cryptury for more updates on cryptocurrencies. We'd love to hear your thoughts. What do you think about Lyn's views on Bitcoin? Tell us in comments. Until next time, stay informed and take care.